Will the housing market crash or not? That's the million-dollar question keeping investors, homeowners, and economists on edge in 2025. Real estate, once considered the most stable and tangible investment, is now under a microscope. Prices are soaring in some regions, cooling in others, and inflation, interest rates, and shifting demographics are creating a puzzle that's hard to decode. But just as uncertainty looms, a thunderous voice echoes across the investing world: Warren Buffett. At the recent Berkshire Hathaway annual shareholders meeting, Buffett dropped a truth bomb. There's just so much more opportunity, at least in the United States, that presents itself in the security market than in real estate. So market watch. That's not just a statement, it's a wake-up call from the Oracle of Omaha himself. But why is Buffett downplaying real estate? And what does that mean for your next move as an investor? Let's unpack what's really happening behind the scenes of America's housing market and whether a crash is coming or not. To understand where the housing market is headed, we need to look at the hard numbers, and they paint a mixed picture. According to data from the National Association of Realtors, the median existing home price in the U.S. has reached $393,500 as of April 2025, a modest year-over-year increase of just 2.5%. However, this average hides sharp regional contrasts. In states like California, Utah, and Arizona, prices have actually declined due to rising inventory and weakened buyer demand. Meanwhile, areas like the Midwest and Northeast, where housing is still relatively affordable, are seeing slight growth, and it's not just prices. Redfin reports that inventory has jumped by nearly 20% compared to last year, and homes are staying on the market longer than they did in the post-pandemic boom. Pair this with mortgage rates hovering above 6.75%, and affordability has hit its worst level in over a decade. Yet despite the tension, experts aren't ringing the alarm bells just yet. This isn't 2008, but it's not 2020 either. So what's really driving the fear of a crash? At the center of today's housing market drama is one undeniable force: interest rates. The Federal Reserve's aggressive rate hikes since 2022 were designed to tame inflation, but they've also priced out millions of would-be homebuyers. According to Freddie Mac, the average 30-year fixed mortgage rate stands at 6.81% in May 2025, up from under 3% just a few years ago. That difference can add hundreds of dollars to a monthly mortgage payment, dramatically shrinking buying power. Housing Wire reports that mortgage applications have dropped nearly 30% year over year, a clear sign that demand is cooling. Homeowners who locked in ultra-low rates during the pandemic are now reluctant to sell. Why give up a 2.9% mortgage for a 7% one? This rate lock effect is freezing inventory in some markets and creating artificial scarcity. But make no mistake, buyers are being squeezed, and unless rates come down, affordability will remain a major headwind. That's why Warren Buffett's pivot toward equities makes so much sense. Stocks don't carry interest rates. Just days ago, Warren Buffett made headlines with a statement that cuts right through the hype. Speaking at Berkshire Hathaway's 2025 shareholder meeting, Buffett said, "Stocks offer much more opportunity than real estate right now." That's not just a passing comment, it's a strategic signal. Buffett, known for his deep value investing principles, is pivoting capital away from property and into equities. Why? Because, as he explained, current real estate valuations are inflated by low inventory and high mortgage costs, while the stock market offers better returns with more liquidity and fewer entry barriers. CNBC reports that Berkshire has sold several real estate-related holdings in recent quarters and instead doubled down on consumer goods and energy stocks, sectors where he sees pricing power and long-term growth. This shift should make every investor ask themselves, if the Oracle of Omaha doesn't think real estate is a good bet in 2025, should you? So will the housing market crash or just cool off? Let's break down the numbers. According to Redfin, U.S. home prices in April 2025 were up just 1.2% year over year, a sharp slowdown from the double-digit gains of 2021 and 2022. In high-flying markets like Austin, Boise, and Phoenix, once darlings of the pandemic boom, prices have already dropped 8% to 12% from their peaks. Meanwhile, CoreLogic's latest Housing Insights report projects a mild national price correction of 3% to 5% over the next 12 months. Not a crash, but a deflation of the bubble in overheated areas. It's not 2008 all over again. Why? Because today's homeowners aren't over-leveraged with subprime loans. Most have strong credit and locked-in fixed-rate mortgages, meaning they're not under pressure to sell. That said, the real risk lies in commercial real estate. Office space vacancies have hit a record high of 19.6%, according to Moody's Analytics, and defaults are creeping up. It's here, not in the single-family home market, where we may see some real fallout. One of the biggest obstacles facing both buyers and sellers in 2025 is the same silent force that's been reshaping the housing market for the last 2 years: high mortgage rates. According to Freddie Mac, the average 30-year fixed mortgage rate is hovering around 7.1%, nearly double what it was in 2021. For the average American family, this means significantly higher monthly payments and reduced buying power. That's why the number of home sales has slumped to its lowest level in over a decade, even as home prices remain high. Sellers aren't budging because they're locked into ultra-low rates from years past, and buyers can't justify the cost of entry. It's a classic standoff. Lawrence Yun, chief economist at the National Association of Realtors, recently warned that without a meaningful drop in rates, housing affordability will remain a major crisis, especially for first-time buyers. This freeze in activity is what's keeping inventory tight and prices sticky. It's not that demand is strong, it's that no one's moving. Let's talk supply, and here's where the real story unfolds. The U.S. housing market is still grappling with a chronic shortage of homes. According to a February 2025 report by the National Association of Home Builders, NAHB, the country is short by at least 4.3 million homes to meet demand. New construction hasn't kept pace with population growth, and rising costs for labor, land, and materials have made it harder for builders to profit from entry-level homes. So even though demand has cooled due to high mortgage rates, supply remains deeply constrained. This mismatch is what's preventing a full-blown crash. As Robert Dietz, NAHB's chief economist, said, "We're not in a housing bubble. This is a supply trap. Homes are expensive not because people are irrationally bidding them up, but because there simply aren't enough of them. And until that structural issue is fixed, prices are unlikely to collapse the way they did in 2008, when the opposite was true. There were too many homes, not too few." Now, it's important to note that the housing market isn't the same everywhere. Some regions are showing resilience, while others are experiencing a slowdown. For instance, cities like New York, San Francisco, and Boston, which have traditionally been stable markets, are seeing less dramatic price declines compared to the sizzling markets of the Sun Belt. In fact, according to Zillow, New York's median home price has increased by 3% over the last year, while cities like San Antonio and Nashville are seeing declines of up to 7%. Why? It comes down to local economic conditions, job markets, and the migration patterns that surged during the pandemic. Areas that boomed during the remote work era, places like Austin and Miami, are now seeing a return to normal as remote work wanes and people start moving back to urban centers. For those considering a home purchase, it's crucial to understand your local market dynamics. Not all markets are poised for a crash, but some may still face corrections. So, will the housing market crash in 2025? Likely not. A full-scale crash is improbable given low supply, rising demand, and a healthy financial system. While prices may dip in some markets, a dramatic collapse seems unlikely. As Warren Buffett says, stocks offer much more opportunity than real estate. For long-term wealth building, real estate still has a place, but it's essential to be cautious and strategic, particularly in today's market conditions. What do you think? Will the housing market see a correction or crash? Let us know in the comments below. If you enjoyed this video, drop a like and subscribe for more insights on investing in 2025.